Also, we've got to talk about some other storm clouds. They are brewing as Apple faces challenges on several fronts here and reports that China's iPhone ban is broadening across government firms, putting pressure on the stock. Shares have plummeted over 6% over the past 2 days. It's the biggest back-to-back slide in 10 months. Staff at several Chinese agencies say that they were given instructions not to use Apple's iPhones or other foreign devices in the office. That was first reported by the Wall Street Journal. Meanwhile, the launch of Huawei's Mate 60 model that could pose as a serious threat to Apple's smartphone dominance. The device could potentially make a significant dent in Apple's sales. Let's bring in Santosh Rao, who is the Manhattan Venture Partners head of research, to weigh in. Santosh, great to speak with you here this morning. As we kind of just think about the impact that this will have near term for Apple, what type of detriment or what type of dent could this mean for one of the largest U.S. technology companies?
Yeah, good morning. I think near term, it's more a headline risk. It's not going to be material. I mean, if it's enforced, whatever they announced yesterday, it's roughly 500,000 if every government employee and everyone stops using it. So it's not much, considering that about 45 million sales of iPhone. So it's a small drop in the whole bucket there. But overall, I think it's the signaling that's happening. It's a shot across the bow to all the countries that want to restrict exports and limit all their activity. So I think China is pretty much saying that, hey, there is a limit to how much you can do that. Already, they're seeing the supply chain being disrupted. They don't like that, right under their feet. And then overall, I think on a larger scale, you have to see that China itself is right now wobbling a little bit. The economy is. Unemployment is high. Exports are down. All the data coming out of there is still weak. And the Apple ecosystem employs roughly 5 million people. So I don't think they want to shake that tree too much, too hard. But the signaling is definitely there. Headline risk is there. But materially, in terms of dollars and cents, I don't see any impact near term. Down the road, okay, let's see where that happens. But at this point, I think we will continue to see the company operate as is.
Santosh, your firm invests in a lot of startups. Are there implications just broadly for the tech sector for companies of any size and at any stage that want to do business in China? Should they think twice about entering that market? Should investors think twice about their exposure to that market?
Absolutely. And I think companies are doing that already. They are diversifying. They're going into India, Vietnam, and other places if they need to. So I think that writing was on the wall for quite some time. They don't want to be the political football that they have become with these two countries fighting it out. So I think that's definitely a big risk. It's the last thing they want at a time when things are slowing down. Especially Apple, things are slowing down there, and they have other issues to worry about. You know, why is the multiple so high when the revenues are coming down? So things like that. They need to work that out, that multiple compression going on. But this news kind of adds another soft layer on top of that, saying, hey, there is this concern. It was always lingering, but looks like China is really trying to get more serious about it. But they're not going to go too far as of now. Down the road, yes. And in terms of your question, yes, all tech companies, I think, have taken notice and they are diversifying away from China.
Okay, and so where else are they going? And where should investors look for companies kind of placing those relationships outside of China to determine whether or not their global footprint that they're looking to establish is one that has staying power as well?
Yeah, I was reading today that the iPhone 5s are going to be manufactured in India, quite a sizable percentage of them. So I think that's another case. Tesla has opened factories there in India or planning to. So I think those are the things that you're going to see that slowly, it takes a while. I mean, Apple is so entrenched in China. It's not going to, they can't just uproot and start somewhere else. So it's going to take a while, a long while. So I think until then, they need to start moving, and they are moving. The other countries are building the infrastructure, giving the tax incentives for these companies to come in, and you're going to see a lot of that as the companies move out. India particularly stands out as a country that benefits from China's, the bans on China.
Santosh, again, you know a lot about private companies, and I am curious, we've been talking about the flow from here to there, but I'm also curious about the flow from China to the U.S. How big a role had Chinese financing been playing in the private market in the U.S., and what kind of changes, if any, have we seen to that?
Yeah, it used to be very big a while back, a few years back. I remember writing a report on how the Chinese VCs are investing here, but it has slowed down quite a bit. And their own ecosystem is growing quite a bit. They are investing within their country. The next big startup, next big Facebook could very well come from there. So things like that. So they are big into they're promoting their own VC system, VC ecosystem. So the investments here have dropped. There is a negative element to this here, what they do. They're watched closely, who they hire, where they're investing, and all that. So there are a lot of restrictions here. So I think they are more than comfortable just doing it there. So I think that's what's happening. You're seeing a lot of that where they're building their own ecosystem.
Santosh, thank you so much. Great to get your perspective this morning. Santosh Rao is Manhattan Venture Partners Head of Research. Have a great weekend.
Thank you. Same to you.